Okay, so here's a quick overview of the state of the UK economy as we head into the final months of the year. A turning point in the economic cycle is happening. The consumer and business confidence data suggests that a recession in 2023 is more or less inevitable, and indeed the UK economy may already be in the early stages of a downturn. Retail sales and GDP are now starting to decline. Consumer confidence is extremely low by historical standards, and real incomes are falling, a squeeze in living standards made worse by higher taxes. But for the moment, unemployment stays low. There are numerous media headlines about the plight of smaller businesses struggling to cope with the surge in energy bills in particular, falling demand, and other cost pressures such as claims for higher wages. And a growing number of businesses listed on the UK stock market have issued a profit warning, as this FT headline suggests. Now, a profit warning occurs when the management of a quoted company informs the stock market that upcoming forecast profits are likely to be significantly lower than current market expectations. This chart shows an index of the monthly value of real GDP for the UK. And a recession occurs when there's a fall in real national output over two successive quarters, in other words 6 months. Well, GDP fell by 0.3% in August 2022. The unemployment data, however, remains encouraging, with the rate of unemployment falling to 3.5% of the labour force in August. The jobless figure, however, tends to be a lagging indicator of the economic cycle. And most economists expect unemployment to start rising as we head into 2023. With wage inflation running at about 5%, the latest data for inflation of consumer prices, 10.1%, the highest for 40 years, is well above wages. And therefore there's a severe squeeze on real incomes for the majority of people in full and part-time work. Now, there are some tentative signs that sterling is recovering some of the lost ground against the US dollar when the pound fell below $1.05 in the aftermath of the failed mini-budget. But continued political uncertainty is a risk factor that will weigh down on sterling, even if the Bank of England continues to increase interest rates. And talking of interest rates, the key question going forward is how much further will base rate increase. Now, the Bank of England is widely expected to raise the base rate by 0.75 of a percentage point or 75 basis points early in November. But there may be a limit to how far the bank is willing to raise interest rates. The Bank of England's Deputy Governor, Ben Broadbent, has warned recently that base rates of over 5% would deliver a material hit to the economy. So there we go. That's the current state of the UK economy. Please do keep up to date with key developments by subscribing to our daily blog and regular updates on YouTube and Instagram. Stay positive, stay happy. See you sometime soon.